Today we're going to take a look at this subject of how to invest in stocks and the stock market for beginners. We're going to look at some reasons to invest, how to get started, how much money you need to get started, even if you just have a little bit of money. We're going to walk you through this entire process. So I want to thank you for joining us here today. My name is Richard with Wisdom Investor. Our goal here is to provide valuable information to help you build a nest egg for retirement, build your financial wealth. Now, there may be many reasons why you're thinking about investing in the stock market or stocks, and there's some good reasons to think about it. So let's just take a look at the history here in the stock market, and we're going to just focus right now on the average return here over a long period of time. And we're going to just say we're in a balanced investment here, and over a long period of time, that's about 7.96% return on your money. If you're investing your money in a bank, in a savings account, you're lucky to get 0.5% to 1%. We're going to show you how you can get more money on your investments so you can grow your assets, maybe for a retirement or home, depending on what your particular goals are. But let's take this 8% figure here, and we're going to look at a money calculator here. And let's say you had enough money to invest $100 per month, and you started with $100. You had $100 to start with, and we just say you could get an 8% return. Again, the 8% return we're talking about is strictly for conversation here. There's no guarantee that the future returns would equal past returns in investments. This would grow to $18,517. Now, that would grow to that amount over a 10-year period of time. Let's take a look here and just say we went out a further time period. Let's just say 30 years. Say you're young and you're just getting started. That would grow to $150,000. So these are starting levels here. You may want to invest more, you may have less. So we're going to take a look at how to invest in the stock market and stocks for beginners. Let's take a look at some reasons why some people do not invest. Here's a survey. 1 in 5 Americans who aren't invested plead ignorance. They don't know enough about markets. Nearly 1 in 10 don't trust the people who would supposedly enlighten them, stockbrokers and financial advisors. Another 7% think stocks are too risky, a small number given the 2 major market crashes that hit investors within a decade. But the biggest reason people haven't invested in stocks, some 53% of those who don't own stocks say it's because they can't afford it. So we're going to look at some ways here today that you can also get started for very little money. Less than $100. Now, reasons why you may want to invest in stocks. Maybe you're saving money for the long run for a house or building a retirement nest egg. Perhaps you're saving for kids' college education down the road. Or maybe you just want to have financial freedom. So these are all good reasons. You may have your own reasons that you want to invest in the stock market. You may be asking, is stocks better than real estate? Which one is a better investment? Let's just look at some positives of stocks. Easy to buy. You can typically fill out an application in 10 minutes, transfer your money, and you can be invested in just a short period of time. It takes a small amount of money to invest. You get diversification. You can invest in different companies, so all your eggs are not in one basket. Easy to get out in the event that there's a downturn in the markets. And you can also build passive income with dividends. Now, real estate, positives here. You can get appreciation. There's tax benefits. Everyone needs a place to live. You can leverage your money. So a $100,000 property, you don't have to put down $100,000. You could put down maybe $10,000 or $20,000. And you can also build rental income. So both of these are very good methods, but they also have different positives and negatives. We're going to focus on stocks and the stock market here today. Okay, we're going to look at how to get started. Questions to answer. First question here is, what is your timeline? When will you need this money? Now, typically, if you're going to be investing in stocks and stock market, you want to be thinking long term, at least 5, 10, 15, 20, 30 years. Now, if you're trying to save some money and you're going to need it, say next year to buy a car, you may not want to put that in the stock market, but there are some other alternatives, and we'll talk about that in a moment. So you need to take a look at your timeline. Maybe are you saving money to buy a house in a couple of years? Then think more short-term investments. If you're saving for a child's college or for your own retirement down the road, then we want to think about stocks and mutual funds here. Next thing is, what is your risk tolerance? If you invested some money, would you be able to sleep at night? And so you need to think about what your risk tolerance is. And the sleep rule is a good rule of thumb to use. If you have a hard time sleeping and thinking about investments, then invest a smaller amount. Now, let me give you a quick story about my two daughters. One of my daughters is more aggressive than the other. So I was talking to him about putting some money aside. And the one that was aggressive said, okay, or actually came to me and said, I want to get started. And so we put some money in the bank, and she says, yes, I want to get going in some stocks. What are some good stocks? Now, my other daughter, I approached her about saving her money, and I said, you may want to get started investing. And the first thing that she said was, am I going to lose money? And so I could tell that she was more conservative. So we looked at more of a long-term approach for her. What percentage of your money will you be investing? If you have $10,000 and you need 8 of it for something else that's coming down the road in a short period of time, you may only want to invest a couple of $1,000s. So you have to look at your own particular situation. What can you do? Maybe it's only a monthly amount that you can do. Maybe you only have $10 per month to invest. That's a doable thing in this world in investing. How much money do I need to get started? So along those lines, you can get invested for $5 to $10 per month with Charles Schwab. Most of the investment companies, there is a minimum, say like $1,000 or so, but you can get invested for as little as $1,000. You can get invested for as little as $1 with Charles Schwab. Okay, so let's go through the points on how to get started. First thing is, you want to pick a brokerage company. Now I'm going to list 3 here, the good ones. There's other many good brokerage companies out there, but Fidelity Investments, which you can find on the internet. You've got Charles Schwab, you've got Vanguard. Those are 3 good solid companies that you can trust. Once you pick a company that you want to work with, then set up an account. It's very simple. You go to their section there, it sets up an account. You're going to put in some of your personal information, name, address, phone number, etc., social security number, and you can set up an account. It typically takes maybe 5 minutes. And we talked about determine how much money you want to start investing. Let's just say, for example, you have $2,000 you can get started with. Then what you would do is transfer that money to the brokerage that you picked. The next thing is, I would recommend, is put your money in a money market fund. So before you decide what investment you're going to do, put your money in a money market fund. You're going to get more return, a higher return from a money market account than you would at the bank. If you have a short-term investment and you're not ready to invest in the stock market, then go ahead and set up a good money market fund. You're going to get a higher return. If you're saving for a car, for a house, still use a money market fund. It will get you a higher return. Next thing to do is decide on your investment. And so there's a couple of ways of going about this. Are you wanting a stock or a mutual fund? Okay, if you're looking for a stock, then what I recommend is picking a stock from a large blue chip companies, your large dividend paying companies. Now, you may be the type of person you would like to have a stockbroker help you. Then, of course, you would need to ask the stockbroker on a list of companies. There are many people that just want to be a do-it-yourselfer. And again, if you're wanting to pick stocks, pick large blue chip companies. I'll give you some examples here. Okay, we're going to look at some top blue chip companies that pay a dividend. And these are some good examples here. We have Verizon here. It's grown its dividends for the last 11 years. So these are good, solid companies. AT&T is a good company. We've got Southern Company. It's a utility company. Duke Energy, Exxon, Chevron. You've got Johnson & Johnson, GlaxoSmithKline, Procter & Gamble, PepsiCo, McDonald's, Kimberly-Clark, General Mills. These are all strong blue chip companies that you could invest in. Now, as a beginning investor, you may be saying, well, how do I pick which one I want to invest in? And that's where mutual funds come in. Mutual funds are investment companies that invest in a grouping of stocks. They do all the picking for you. All you have to do is just buy the mutual fund. And we'll take a look at examples of a mutual fund. Now here's an example of the top 10 holdings in Vanguard Growth Mutual Fund. And you can see these are going to be all companies that you are familiar with. Microsoft, Amazon, MasterCard, Visa, PayPal, United Health, Illumina, and various other companies. They may have 100 companies that they invest in here. So instead of you having to go and pick out the particular fund, they do it for you. If you went out and picked one company and let's just say its performance was below what it should be, your return is going to be affected solely by that one company. However, if you have a grouping of companies here, if one company has a bad year, you're not going to suffer as much because of diversification. Let's take a look at what Warren Buffett says here about investing. He says, my money, I should add, is where my mouth is. What I advise here is essentially identical to certain instructions I've laid out in my will. So this is what he's telling the folks who are inheritance to his will. Put 10% in cash in short-term government bonds and 90% in very low-cost S&P 500 index. So an S&P 500 index is going to be investing very similar to this here. It's going to have the top 500 companies, and you do not have to go out and try to pick which company is going to be the best. If you buy things for far below what they're worth and you buy a group of them, you basically don't lose money. So he's saying buy when the price is low and you will basically come out ahead. So we talked a little bit about dollar cost averaging here. The dollar cost averaging if you're new to investing. So if you're just getting started, let's say you had $2,000 to invest and you don't want to just put all that money in right away. So do dollar cost averaging where maybe you put $50 to $100 per month in your investment each month. And therefore, if the price fluctuates, if the price goes down, you buy more shares as it goes down. And then as the price goes up, those shares increase in value. If you have a large sum of money, wait for a good buying opportunity. Like Warren Buffett said here, buy when most people don't want to buy, when they're far below what they're worth. So once you determine what your investment's going to be, we talked about stocks here, blue chip, large company stocks, or mutual fund. Personally, I would recommend that you get a good S&P 500 fund to start with. To either do dollar cost averaging, start at $5 to $10 per month if that's what you have. But whatever you do, get started. If you have more money, you could start with $1,000 in your fund and then do $100 per month. Or you may be a person that has more money than that. That's fine. And then once you buy your investments, you want to monitor your investments. So just a couple of money management rules here. Looking at the big picture, if you have debts, also let's get those debts paid off. Participate in your company 401k if you have one. Many times they will match it, maybe up to 50% of whatever you put in. That's free money. Where else can you get free money? And then lastly, make sure you have an emergency fund of at least 3 to 6 months of what it costs you to live. 6 months preferably. So we've been talking here how to invest in stocks and the stock market for beginners. We laid out a plan on how you could get started. We gave a few examples of some types of companies you could use and the overall process. And so I want to thank you for watching here. Leave your comments if you have any comments, and I hope you have a successful investing lifetime.